welcome to the Shipper Update. I'm Anthony Smith here alongside Tony Mulvey, and we're going to give you a week in review talking about some of the most recent updates that may be impactful to some of you shippers out there. So Tony, this wasn't the first update for the week, but this is going to be one of the biggest ones, and this is the CPI. We're looking at a 7.9 year-over-year increase when you're looking at this number, and a 0.8 increase on the month. And it's just not, this was just like the first month of increase. This has been pretty much going up and climbing on a month after month level.
Yeah, I mean, I looked at the release yesterday, and like, there's kind of two cups, right? I mean, back August, September of last year, we saw kind of this slowdown in those increases before ramping up into the end of the year. The first month of December, January of this year, or I should say this year, but into this year, we were declining, and now we're right back headed up. So, I mean, it's definitely interesting when you look at what that 7.9% increase, highest since July of 1981. So, I mean, we're talking over 40 years since we've seen anything like this. I mean, you think about that time frame, that's a lot of people, especially people that are working in transportation. I mean, that's before their lifetime.
Right.
I mean, no, it's well before mine. So it's, when you think about, I mean, it really is unprecedented what we've seen. I mean, people haven't faced this.
Yeah, and I mean, when we're looking at this number, I think we can kind of peel back some of these results and look at where some of the increases came from. But the big thing is like this is through February. And so we even saw things like energy, which increased 25%. This isn't even accounting for some of the current movements that we're seeing right now.
Yeah, I mean, if we talked about it earlier, I mean, these increases that we're seeing in like gas prices, right? Yeah. They were already kind of accelerating, right? They were, I think gasoline in the reading was up 38% year over year. That doesn't account for what's happened in the past 2 weeks, right? So, I mean, this number is going to accelerate even more. I mean, you look at the month-over-month reading, it was like 6.6% month-over-month. Right. And January, it was in the sixes. And some of the older data were smaller increases. So we're about to take out some of these small increases and replace them with bigger increases. So it's going to make this number even pop, I would guess, even higher. Yeah. So, I mean, I will say that 7.9, a lot of consensus was right around that number. I mean, it seemed to hit the number people expected, but it's still, when you look at it, it's still just remarkably high.
Yeah, remarkably high indeed. And of course, when we look at this chart, we see this dashed green line here. Essentially, it's going to be a regression line, so it's almost kind of showing where the typical trajectory would be of this blue line for the CPI, because it is continuing to move up and up. But taking note of the pace, and we can definitely see how rapid the pace has increased on the tail end of this data here. Going into our next chart, we're going to get into a fun one. That's going to be total consumer credit outstanding. So this is going to be composed of revolving and non-revolving credit as well. So Tony, we're looking at this data, and we can definitely talk to some of the Bank of America data as well. This is not as recent as it, but it is kind of still impactful to show that there is still a good amount of non-revolving credit being implemented and deployed throughout the economy by the U.S. consumers. And there was a little bit of a surprise on the last month's data for the credit card spending, showing that there was a slight dip down in some of the credit card spending that we're going to get into a little bit later. But more recently, there was some pretty impressive results.
Yeah, I mean, you look at total card spending, I mean, it's up like 13% year over year. I mean, that includes debit and credit card spending. I think there's definitely some concerning things in that. I mean, I think one of the big ones is in that credit card spending report. I mean, you look at low income earners, so under 50,000 compared to high income earners at over 125,000. That percentage that say oil and gas, I mean, that was the highlight of it, right? Yeah. Because that's, I mean, it's been in the news for the past 2 weeks. Gas prices, right? So what you're seeing, that as a percentage of total income, it's definitely increasing on both ends. It's more impactful on those lower income earners because it's obviously higher percentage. I think it's like 8 or 9% of total income. Pretty substantial, right? Yeah. So then you look at the credit and debit card spending of those earners. Well, credit is now outpacing debit card spending, which to me is a little concerning, right? So I mean, you think about debit cards, money you have, credit you're taking. If that trend continues, do you think, I mean, consumers might especially those may overextend. They're having to put necessities on credit, right?
Yeah.
This outstanding credit, it may cause that thing to skyrocket. So
Yeah,
I think that's one thing I'm paying attention to.
Yeah, and it creeps up on a lot of people when you look at some of that credit card usage and really the different types of credit card usage and debt acquisition. So we're looking at also buy now, pay later. That's also becoming a lot more popular and is going to be a form of debt now being tracked, I think, by 2 of the 3 credit bureaus now. So these are going to be areas to watch closely, as you said, especially some of the lower income earners in the U.S. really going to get hit a lot harder and a proportion-wise to a lot of these increasing prices that we saw in the CPI report, and really it's still ongoing now. But Tony, thank you so much for joining me for this shipper update. We'll have you back on in just a few moments. Right now we're going to take a break. Don't go anywhere. We'll be right back.